Ms. Davis.
Hi, how are you?
Hi, John Newberry.
Nice to meet you.
Welcome to our agency.
Thank you.
I appreciate your taking the time to come in.
No problem.
I got the information that you faxed to me, and I wanted to go over all that with you, but I want to first of all let you know I put together a little brochure. I'm going to leave all this with you.
Okay.
It's to make sure that you have any kind of questions you may have that we may not cover, that you have a place to go for the answers. And then at our agency, it's really important to us that in terms of customer satisfaction, that you're completely satisfied, not just satisfied, but completely satisfied.
Okay.
And that's my commitment to you. And what that means is, whether you deal with one of my staff or with me directly, if you have any questions whatsoever, please let me know, and particularly if I don't do something right, because I want to make sure that you're satisfied 100%.
Okay.
And I pledge that to you. Okay. One of the things I'd like to do before I get started on your coverage, just if you don't mind, is I'd like to ask you a few questions so I can find a little bit about your things that are important to you in terms of your coverages. Okay. First of all, with your present agent with State Farm and any who you have currently, did they help tailor your policies to fit your needs specifically?
I don't believe so. I just called it for quotes and gave quotes over the phone and current policy.
Okay, so they didn't really explain it to you?
No.
Would that be a benefit to you to know exactly what you have coverage-wise?
I think it'd be beneficial.
Okay, all right. Do you have a thorough understanding of what your policies cover? I mean, do you know already?
I don't understand the coverages. I know I have coverage on the car in case I get in an accident, but I don't.
Would it help you if I could explain that to you, or make sure that you have the information so that if you have questions that you can get them answered?
Sure.
Okay.
Sure, that'd be great.
All right. When you had your last claim, how did your agent handle it? Did they get involved in it in any way, the agent or the staff at the
I've never had a claim.
Oh, you never had a claim?
Never had a claim.
Okay, well, that answers that. Well, one of the things I want you to understand about the way we handle claims, because I know when you see on TV, people will, like Geico and some of these that will call and so forth, and you're not dealing directly with an agent. And a lot of times when it comes to claims time, you're dealing with an 800 number or whatever. And one of the things I want to pledge to you is that we handle claims even out of our office here. Sometimes we write the check here directly. So we can get involved to whatever extent is necessary, but I want you to feel comfortable in that not only are you covered and you can get a hold of somebody 24 hours a day, you also, whenever you do have that claim, you can call us and we will get involved in it. Okay?
Sounds good.
I'd like you to have that peace of mind. Okay. Are you always able to reach your agent when you call, or the staff at your other company?
I usually can get through to the office because I know the hours, but I don't always get a phone call back from the agent.
Okay.
And I don't like dealing with the staff all the time because it doesn't make me feel comfortable.
Okay. All right. Well, I'm sorry that you had that experience, and I hope that in dealing with my staff that you don't run into that. Like I said, I have a commitment to customer satisfaction, but if you have to deal with the staff and you'd rather deal with me, if you'll please let them know, they will definitely let me know, so I will call and talk to you directly, or I'll take the call if I'm available. Okay. And in addition to that, if we're not here in our normal business hours, we also have a live person you can talk to. So if you're stranded out on the side of the road or you get involved in an accident, it's 2 o'clock in the morning, you can actually talk to a person.
Oh, okay.
Okay, and that word gets back to me. Okay. All right, now let me ask you something about your current policies. Do you have, as far as you know, with what you currently have, do you have replacement cost for your vehicle, meaning for rental reimbursement, so that if in the event that something happens to your car, there's a rental car to drive and to take, to get you to work?
Actually, my policy, I didn't purchase that coverage because I have an extra vehicle.
Okay. Is that something that would be meaningful for you now, or do you need that?
Now it would be meaningful because I don't have an extra vehicle to get around.
Okay.
If my vehicle's...
Okay, well, the reason I asked that is I noticed that you don't have that on you currently, and that's most people do need that because they need some way to replace that vehicle.
Right.
Okay, all right. Another thing, towing and emergency road service. Is that something that you have on your policy as you understand it?
I don't know.
Okay.
Never had my car towed.
Okay, never had it towed.
Never had it towed.
Okay. is it something that you've not had a claim and you've never had it towed, but if you were stranded somewhere, would it be helpful to you to have some means of getting the car towed somewhere?
Oh, yeah.
Okay.
Oh,
All right. And now, since you said you haven't had a claim, you may not have had an opportunity to experience this, but one of the things that we provide also is a repair in writing, meaning if and that's again along the lines of trying to make sure that you're comfortable with what we're doing. Our claims process is such that in the event you have a claim, we will also provide you with a written guarantee that if something happens, say the paint starts peeling later on, you can take it back and get it repaired.
okay.
Would that benefit you?
That would be a big benefit.
Okay. Good. All right. Let me talk to you a little more specifically about your coverages. And I have a brochure here that I'm going to leave this with you.
Okay.
I'm going to keep turning this thing around. What this is something that explains each of the different coverages so that and I may not cover all these right now, I don't know that that's necessary, but I do want to make sure that you know that you have that information. Plus, if you have any kind of questions that I don't cover, you just say so.
Okay.
And if not, we'll go back over it, at a later time.
Okay.
Whenever those occur to you. Okay, one of the things that you have with your present coverage is you have the liability proportion, which covers if you're legally liable in an accident and somebody is injured, let's say, you're covered for that, and then you're also covered for property damage, to the vehicles involved.
Oh, okay.
All right, and right now you're covered for $50,000 per person and $100,000 per accident for the bodily injury portion, and $25,000 for property damage. Okay. Now, the reason that's important that I cover that is I want you to understand what you had, because these seem a little low to me, and one of the things I want to suggest to you is that we raise this. The reason that I want to make sure that you understand and you agree with me is if, we live in a litigious society and people are suing people all the time at the drop of a hat for nothing.
Yeah.
And the last thing you want to do is get into your assets, and if you don't have proper coverage, that's exactly what will happen. Okay, so if you're only covered for $50,000, and it doesn't take much these days for somebody in an auto accident, and particularly if there's several people involved, for that to reach that,
Right.
Up to $100,000. So I'm recommending we raise it from $100,000 per person and $300,000 per accident.
Okay.
So I'm talking about considerably more, but I wanted you to understand the reason. Okay, does that make sense?
That makes a lot of sense.
Okay. Also, on property damage, $25,000, as you know, cars these days, most cars are $20,000 plus. So if there's more than one car here, you may be grossly underinsured.
Right.
So that's the reason I've also raised this to 50.
Okay.
I just think that's a better situation. Now, do those numbers seem reasonable to you?
They seem reasonable.
Okay. All right. Now, also on the uninsured motorist, to help you understand what the difference is, uninsured motorist does the same thing that we just talked about with the liability here, but it covers you.
Okay.
And what that means is, if somebody's involved if you're involved in an accident and somebody doesn't have insurance, or they have insurance but they don't have enough, then this covers you. Okay? Now, I think that it's only important I think it's very important that you have coverage yourself, to cover yourself as much as you're covering for somebody else. That makes sense? And so, right now you're covered only for $10,000 per person, $20,000 per accident. And to me, that seems grossly underinsured. Do you agree with that?
Do I have to have that coverage?
You don't have to have.
Okay.
Is that?
Should I purchase that? Or should I
Well, I personally think that you should. Let me just ask you this: if you had, if you're involved in an accident, and let's say it was a hit and run driver, okay, and there were several people involved, injured in your vehicle, or you ran into a building, or who knows, and it ran into all this money, wouldn't you want to be protected?
Yeah.
Okay, now see what the point here is, if you don't have it, then that's exactly what would happen in that situation. Now, obviously you need to be protected, by state law for damage you do to somebody else.
Right.
Okay, but the reason we're talking about these higher limits for that is to make sure that they don't reach into your assets.
Right.
But when it comes to uninsured motorists, that can happen the same way if somebody is not insured, or they leave the scene of the accident and you don't even know who it is.
Yeah,
Okay, does that make sense?
Yeah.
Okay. Also, on your deductibles, I assume your deductibles are okay with what they are, and unless you have an objection to that seems reasonable to me. The other thing is that on the let's see. On your rental reimbursement, which we talked about, so you currently do not have that.
Okay.
And you said that was important to you, that
Yeah.
now, you didn't need that in
Now
the
it
past,
is
but you
that.
do need it now. So I've added that in down here. It'll cover you up for $20 a day.
Okay.
So that if your car is in an accident, it's in the shop, you have at least a vehicle to get around.
Right.
Okay.
Right.
And then I've also added towing in, which you said that it would be helpful if you were standing on the side of the road. It's not a very costly part of this. Okay. Now the reason I wanted to make sure you understood that is there's a difference in the cost here. Okay. With them, you're currently paying $603.50. With what I've just outlined for you, it would run $660.90, which is not a lot of difference, and this is for 6 months.
Mm-hmm.
So it's only $10 a month.
Mm-hmm.
Okay. Does that seem like a reasonable amount for the difference in coverage? Because we've more than double the
It seems like we're
coverage.
getting a lot more coverage, and it's only $10 a month. $10 a month is.
Okay.
It's not like $100 a month.
Okay.
$10 a month is reasonable.
Okay, good. Well, not only that, if we're able to take care of your homeowners for you as well, then we can actually drop this price down to less than that, okay? Even less than what you're paying now,
Okay.
for more coverage.
Mm-hmm.
That make sense?
Yes, sir.
Okay. So I want to talk to you about your homeowners as well, but I just want to make sure you had
I feel
understand
comfortable with
this.
this.
Is there any reason why you wouldn't go ahead with this at this time?
No, that's fine.
Okay. Well, let me set this aside and let me talk to you about your homeowners. And I'm going to leave this, like I said, with you to
Okay.
go over later. And anything we didn't cover, you feel free to ask me a question. We'll be more happy to answer. Okay. As far as your homeowner's insurance is concerned, you currently have dwelling coverage of $235,000. Now, I've run a cost estimator to make that as simple as I can to you. One of the things that we're required to do is send an inspector out to inspect your property. The first thing they're going to do is tell us what it costs to replace that property if it burns to the ground. It has nothing to do with market value. You know, you might think, well, my home is worth X number of dollars, and you want to insure it for more than it's worth.
Right.
Well, it's not really. That's not really what we're talking about. We're talking about rebuilding it from the ground up,
Oh, okay.
with all the studs it takes to put in it and all the costs it takes to build it. It actually sometimes costs more. I mean, sometimes considerably more. Based on the information I got back, you really need to have it covered for $262,000. That's the reason that you'll see these differences.
Okay.
Okay. Something else that's important here is your personal property. Now, this is everything, all your contents, everything you own, all your furniture and goods that you have in your home.
Okay.
What you're covered for currently is what's called actual cash value. Do you know what that means?
No.
Okay. In essence, what that is if, let's say you had a 10-year-old TV and the house burned down or whatever, and the TV was gone and you were getting it replaced, they're going to replace it with a 10-year-old TV in essence, because they're going to depreciate it for each of the years.
Oh,
there. That's
okay.
all you're going to get for it, okay?
Right.
Most people today are going with replacement cost coverage, which would cover it with a new TV today, like what you had, but with today's prices.
Oh.
Does that make sense?
Yeah.
Okay, and that's why I've shown here the personal property to be covered at $183,000. That's replacement cost.
Oh.
That's a different kind of coverage. Okay, and your liability, and unless you feel that it needs to be more, I think what you have is currently adequate. Okay, meaning that if somebody slipped and fell in front of your house and you were sued, okay, and you're liable for it, $100,000 probably would be adequate. How do you feel about that?
Yeah.
Okay. If not, we can always raise that, but I just wanted you to understand that based on what is typical.
What might need to be some of the reasons why I would want to raise that?
It's just if, well, let's say for instance you had a trampoline or something in the backyard, okay, something that would, so you get some kids over and there's an accident, you gotta have something like that would cause a problem. And I mean, it could be any number of things that where the liability goes up. Okay, and so if you had something, maybe there is something that would cause a need to increase it. If so, you let me know.
Okay.
But for most people, would be adequate. Okay, and I'm trying to be, as appropriate for you as I
Sure.
can. Okay. In addition to that, your deductible seems reasonable. We can in fact reduce costs if you want to share more of the cost with the deductible. That's what a deductible is. You're actually sharing the cost, okay, with the company. So your premium goes down if you take more of that risk on. Okay. I don't know. Are you happy with the
I think
deductible?
I'll keep it at $250.
Okay. Well, what you see in terms of the differences here between the 485 and the 578 is the difference in the coverages, and you can see they're substantially different in terms of the amounts here. But also, since we're going to take care of your auto, it drops it down to this. So it's not a significant difference. So overall, you're about where you were, and yet you've got a lot more coverage. Does that make sense to you?
Yeah. I just don't feel comfortable paying more money right now.
Okay. Well, it's like what I'm saying. It's essentially the same, but you've got more coverage. Okay. Now, if we were to back it up to what you had in terms of coverage, it might very well be less than what you're paying or what you're paying.
Okay.
But I want you to understand why we're covering it the way we are, because, see, remember we talked about it. You said that it was important for you for this to be tailored to suit your needs. That's what I was trying to do, is make sure that we tailored it so that you knew what you're getting. You were buying what you were paying for what you're getting, but it was a reasonable price for that. And even if it is slightly more or about the same, you're getting more coverage and it's more tailored to what you have.
Okay.
Does that make sense?
Makes sense.
Good. All right, and I'll get back to the applications in just a minute. One of the things I want to do is also explain about this is a brochure that explains our claims process. So you said that you have not had a claim, so you haven't had the opportunity to understand this. One of the things that's really important here for you to know is whatever you do, if you ever have an auto accident, do not admit fault. Okay, that's the first thing. And the second thing you should do is get on the phone and call. Okay, but this explains the process and what to do and how to do it. I'm going to leave this in. It'd be a good idea for you. I've got a smaller one too that I will leave you that you can actually put in the glove compartment. And so if you have an accident, you just take it out and all the information's right there. Because I know how it is when people that I've talked to many times have had an accident. They're scatterbrained, they don't even know what to do. So this will help step you through it. Okay. All right. Something else. We didn't discuss this, but I think it's important that we cover it. Oh, by the way, backing up here, this is some information about the homeowner's coverage. We didn't go. I explained to you what the coverages were. Did I do a good enough job of that?
I think I understand.
Okay. This just tells you a little bit more about it, and if there's anything you do have a question, feel free to let me know.
Okay.
Also, I've got a brochure here on life insurance that does a cost analysis, and let me tell you the reason I've done that. Most people readily insure their cars. It's even required by law that they insure those vehicles and their home and so forth. And yet the most important asset they have is themselves, okay, and their earning power. If something happens to you, to your husband, that earning power is gone and the family is devastated, okay? You may have adequate coverage. I have no way of knowing that. But one of the things in being a full service agency, one of the things that's important for us is to make sure that we don't neglect that. Okay, if you have adequate coverage, that's terrific. But it's part of my job. If I'm going to do the right kind of job for you and provide you with what you're looking for, I want to make sure that I've covered all the bases. Okay?
Isn't life insurance really expensive?
No, it's not. It all depends on what you're trying to do. There's different kinds of life insurance. And I'll be more than happy to get that in great detail with you. What I want to do right now is that what this does is, this is a little brochure that helps explain the different coverages.
Okay.
And this doesn't explain the coverage. What this does is help you to understand the needs that, for what you need in the way of coverage.
Oh, okay.
And in terms of explanation, when you fill this thing out and bring it back to me, then I'll be more than happy to go over in great detail the difference in the coverages.
Oh, okay.
Okay, what this does is let you know, like for instance, most people today think that, or what the experts say is that you ought to have about 10 times your income in life insurance. Now, vast majority of people do not. They don't even come close.
Okay.
You may very well have, but if you don't have, this will help you identify if there are any of those kinds of needs. Okay, so I think it's important for you to at least take a look at it. Is that reasonable?
Sure.
Okay. All I ask you to do is complete the thing, and I'm going to give you a postage paid envelope. You can mail it back to us, and then I will be more than happy to go over it in more detail.
Okay, great.
All right. But also, we have some information here. I mentioned on our towing that you had we can provide a towing, but do you currently have any kind of a package for like for instance, if you were like AAA or something like that, a roadside service? Okay, you said you had never broken down, so you may have never had the need. This is a brochure that explains our travel insurance kind of package that also includes towing.
Okay.
So it's something that you might find advantageous, in which case it would supplant what we do here with towing.
Okay.
And we can make that adjustment.
Okay.
But if not, just read over it, and if you have any questions, I'll be glad to answer those.
Okay.
Okay? So I'm going to leave this with you,
All right.
and I appreciate you coming in, and we'll get all this information to you, and we'll fill out the application.
Okay, great, thank
All
you.
right, thanks. Appreciate it.
See you soon.
Okay. Do that.
Oh,
I just want to stand up. Ready? Andy, good to meet you.
Thank you.
John Newberry and Sandy, I've met you before. You came in for the auto and homeowners, and I appreciate you coming back in. I appreciate your time very much. And like I told Sandy, one of the things that's really important in our agency is customer service, customer satisfaction. We pledge to 100% customer satisfaction. And I want to tell you that person, since I'm just now meeting you, that so you understand that that's ultimately what we're trying to accomplish. So if there's ever any questions, anything that I don't provide in the way of answers for you, feel free to always come back and let me know, or any of my staff as well. It's really, really important to me, okay? Because I want to make sure that everything is handled and you're satisfied, okay? What we're here today to talk about is life insurance. It's real interesting. When it comes to auto and homeowners insurance, you can't even get a loan to buy a home or get a car without having somebody expect you to have insurance to protect it, right? And you wouldn't even dream of doing that. As a matter of fact, the state requires that you have insurance in order to drive your vehicle. And yet, most people, surprisingly, don't value the importance of their life and how the economic impact that has on a family if something happens to them. So I really appreciate you taking the time to come in and talk about this, because I think it's a really, really important situation. Okay, would you agree with that?
Oh, yeah.
All right. I've put together another brochure. I know that the other one I gave you had a lot of information about our homeowners and auto policies. This specifically is about life insurance, and I'm going to cover this for you, but then I'm going to give it to you to take home so that you can look through it and review. And if you ever have any other questions, feel free to let me know. Okay? All right. To begin with, I think one of the things that most people, you've heard the Allstate name, and you recognize the fact that Allstate is auto and homeowners insurance, but most people don't even realize we sell life insurance, okay? And yet we have a very large company in that respect alone. So I put a brochure in here that outlines that, and I think some important facts, like for instance, we have just in the Allstate life insurance company, well, the Allstate insurance company has been around for 65 years, okay? That might surprise you, okay? Also, we have assets, we have surplus of $2.8 billion in our life insurance company. And the reason that's important to you to know is if we have a hurricane that comes through the Texas Gulf Coast, and which happens periodically, all the claims that they're paying out for the auto or for the homeowners for that situation, and auto too for damage to automobiles, the life insurance reserves are specifically set aside for life insurance claims. So you can have the peace of mind of knowing that you're protected totally separately from the other. Does that make sense? Mm-hmm. Is that important to you?
Sure.
Okay. That's one of the reasons I want to point it out, just so you know that we're a large company and we do have those kind of assets. Another thing is that we're rated, just like you have a credit rating, and everybody does, businesses do too. We're rated by several things that you may have heard about, like Standard & Poor's and Moody's, and in the insurance company, the AM Best. And we're rated here, and this gives the ratings to show that we're rated excellent and A++ and all that kind of thing, which is also important for you to know that we're not just a startup company or a fly-by-night operation, and we have ratings, very high ratings from the major people in the financial industry. Okay? So when we're talking about financial planning for your whole financial picture, this is a part of it. Okay? So I'll leave that with you for you to review. And if you have any questions, let me know. Okay. Also, when it comes to life insurance and thinking about along those lines, I know that most people, it's hard to identify what need you have, and a lot of it has to do with just understanding some basic concepts. Like, for instance, when you're a child, everything's done for you. You just go out and play, and mom and dad take care of everything, right? But when you become an adult, particularly when you're parents, you've got a different kind of responsibility, and all these things fall on your shoulders. As a matter of fact, today we live in a society where both parents work, and it's almost impossible for anybody to really do things like they used to be done. It's pretty incumbent upon us to make sure that we take care of those responsibilities. But when it comes to thinking about life insurance, what happens, Andy, what would happen if something happened to you and you were killed in a car accident, as an example, would there be an economic impact on your family?
Sure.
Okay. And what way would that be to you?
Well, my income will no longer be there.
Okay. Sure. And obviously, if that happened today, you've got a number of years yet before the kids are grown, and she's not working currently. Okay. And so, and other than obviously she is working as a homeowner, and I don't want to make light of that, okay? But because it's pretty hard work, but for her to have to go back and earn the income that you're bringing in, she's got to either go, get back into the workforce, which is no small task. So there's definitely a need there. Does that make sense? Mm-hmm. Okay. All right. One of the things that is important also for you to understand is that when it comes to a problem that we have as human beings, we either die too soon or live too long. Okay? If you die too soon, that economic impact we're talking about is a reality. If we live too long, then we run into a situation of have we planned properly for the future. So we're going to cover both of those things. Here today we're going to talk about specifically, and more importantly right now, what happens if you die too soon. But if I'm not mistaken, I'm sure that you're interested also in what happens in retirement, and am I going to have money to take care of my needs? Am I right about that? Okay. Well then, this is important that we also cover this, and that's what financial planning, you hear that term thrown around a lot, but that's what financial planning is all about. It's taking care of your total financial picture. Okay. And it's more than just life insurance to protect the event of dying. It's also if you live. Okay. But surprisingly, despite the fact that everybody takes care of insuring their auto and their homeowners, are you aware of the fact that this is an interesting fact that 1 out of 100 homes burn down? Okay, 1 out of 100, and yet at your age 35, 1 in 15 die in 15 years. 1 out of 15 people die in 15 years, and in 30 years, 1 out of 4. So 25% of your age group is going to die in the next 30 years, as opposed to 1 out of 100 homes that burn to the ground. Does that seem a little out of proportion? Okay. And the reason that's important for you to understand is that there really is a need to prepare for this. Do you agree with that?
Yes.
Okay. Also, when it comes to looking to the future, something else that's really an interesting fact here. This is a survey that was done by the Social Security Administration, where they analyzed 100 people with regard to what happens from age 35 on up to age 65. So over that time period, what happened is that 13, let's just start first here with, there's 27 out of the 100 that have died. Okay, actually have died out of that 100 people over that 30-year period, which is significant. Okay, 13 of those people live, but were making less than $7,000 a year, which is below the poverty level. Now, when you add those up, that's roughly 40% of the people are in that boat. That's lack of planning. Wouldn't you agree? Okay. Also, 53 have incomes between $7,000 and $50,000. Okay, you currently earn what, $70,000? Is that what I remember?
It was 40,000.
40,000? Okay, but you're all right. I'm sorry. I was thinking of somebody else. But when Sandy and I were talking about your income, you're currently at 40,000, but you're getting ready to move to higher, bigger things. I'm sure along the way, and your objective is to be to at least 50,000 or better. Correct?
Yeah.
Okay. I mean, you're almost there now. Okay. So what you would like to do is be at that point by the time you retire. Would you agree with that?
Right.
Okay. Well, 7 out of 100 have reached that plateau. Now, obviously, they've done that because of planning or sheer luck. Maybe they were born into it. But if you don't plan, you obviously aren't going to get there. And part of it is earning power. Part of it is learning to invest what you do earn. Okay. All right. When it comes to the how life insurance can fulfill these needs, let me talk about the needs analysis that I had Sandy take and you all went over. And I appreciate, by the way, you were there very thorough with this, and it's really helpful. What we covered here is some needs. some needs that are there for financial needs in terms of things that you have to be sure to take care of over your lifetime. Okay, as an example, mortgage and loans. Obviously, if you have a mortgage and you can't fulfill the mortgage, they come and take the house back. Okay, so if something happened to you, Andy, and Sandy was left with the kids and that mortgage, and there was no way to pay the mortgage off or make the payments, it would be a serious problem. Okay, the same is true with these other things, and you can look through these in more detail, but it deals with things like spouse and other loved ones, and this would relates to some of these categories we were talking about here, like for instance the final expenses. These are funeral expenses and things of that nature. They can add up real fast. We also went over the emergency fund, and this is like setting aside income that can take care of emergencies, because right after somebody dies, there's always somebody got their hand out for something. And so having some sort of fund set aside is really important. You agree with that? Okay. Also, when it comes to educating your children, I know that you identified that was an important thing to both of you, that you educate your kids, okay? And it's not cheap these days. As a matter of fact, what we found here is it's going to cost you nearly $140,000 to do that, okay? Now, obviously, if you're able to put the money aside, that's great, but what happens if you die before you complete that? Would that have an impact? Okay, so you see why there's a need for insurance? Okay, now, when we went through this whole thing, were you surprised at these numbers that we came up here in terms of need?
A lot of money,
Okay,
huh?
and see, and just on you, Andy, it was $753,000 was a need that was there, and for Sandy, you had a need of $440,000, and that was only looking at two aspects here. One was the final expenses, which you can't get away from, and the other was just a child care expense, because obviously if she's not here, you're burdened with that situation. That makes sense to you? Okay. But I want to congratulate you also, because you do have some savings and some insurance that you have that have taken care of some of those needs, and I've applied those here in this form as you went through the steps. But we still are left with a need for you of $586,515, and for Sandy of $388,600. Now, do you agree that those needs are real?
Yeah.
Okay. So, does it make sense to you that life insurance is a better way of taking care of that need, since you don't have the funds to do this?
Yeah.
Does that make sense? I mean, you're paying cents on the dollar instead of paying real dollars. You're getting the money from somebody else to take care of the need by just making a little payment. Okay, that's the advantage you have. Okay. Something that you also need to understand about when it comes to life insurance, there's basically two types of insurance. You have term insurance and you have permanent insurance. The easiest way to remember this is term insurance is you're renting death benefit. It's like renting a home or an apartment or whatever. And with permanent insurance, you're buying death benefit. Now, the difference between the two is, like when you buy a home, you build up equity in the home and you have some value there, correct? The same is true with permanent insurance, is that some of the money you pay in, what happens if you live? Like we were talking about before, live too long. What are you going to do? All those premiums you paid in, you want some of that money back? Okay, most people do. Okay, well, that's the advantage that permanent insurance provides. Okay, plus some of these needs may change over time as well. You may have more kids, so there's a lot of these things change, and so one of the things that can happen with permanent insurance is that we can provide some flexibility for growth in there. Okay, does that make sense? Another thing is annuities, which deals with retirement, and I said we'll get back to that at another time because it's sort of out of the scope of what we're trying to do here. But in a complete financial planning and looking to the future, that's a good thing for you to consider. Now, with regard to my proposal I put together for you, what I've done is I've taken a combination of these two plans. Okay, if you had your choice, which of these plans would you be most apt to be interested in? The one that you rent or the one that you buy?
The one that you buy.
Okay, because it gives return back, right? Okay, and most people feel that way. The problem is that it costs more, and sometimes it takes it out of the realm of what's real. Okay, we all have to deal with what's real. So based on what your need is, and the number one thing we have to take care of here is your need. the next thing we need to do is make sure that we take care of it in a way that's affordable. Okay? So what I've put together here is a plan that involves, instead of going with a plan for each of these different areas, okay, we've got a nice little thing that we can do. We can put different things together so that you don't incur an extra expense for policy fees or whatever, a whole bunch of different policies. So I've put together a permanent plan with a base amount of $200,000. Okay? And this is on you, Andy. And then we've put a rider on it, a term insurance rider, that still keeps the death benefit level for what we're talking about here. And it's for $386,000, but total it matches the $586 that you needed. Okay? Then we've added a rider for Sandy for $388,000, which matches her need. Okay? So that you're protected in either event. Okay? And in addition to that, I provided an amount of $10,000 for each of the kids. This is in the form of a children's rider that and if you have additional kids, they're automatically covered for that $10,000 as well. Now this provides final expenses because that's a reality too if something happens to one of the kids. But what we're really doing for the kids is providing insurability for the future. If something happens to them to where they, say, get juvenile diabetes or something and they have a difficult time getting insurance later on, this would allow them to be able to do that. Okay? Is that realistic to you? All right. So this plan then basically covers the needs that we talked about. It has a little bit of both of the things we talked in terms of the permanent insurance and the term insurance. And if you want more permanent insurance and your financial status changes, you can also convert some of this to permanent insurance, which provides cash values. Now I'm going to print out an illustration for you in a minute that gives you more information about how these cash values build. Okay? And in addition, I've provided a little brochure here that explains in more detail about how the permanent insurance portion works and all the benefits of it. And I'll be more than happy to answer any questions that you might have about that. But I wanted you to understand that this can be a sort of a complex subject, and I don't want to take a whole lot of your time here, but I don't want you to go away unsatisfied with regard to an explanation. Okay? Anyhow, all of this would amount to $257 a month. Okay? And so all we need to do to put that in force is just to get one payment. And then you can have it bank drafted if that's convenient for you. And we can put it on a credit card or money order or whatever works for you. How would you like to pay for it?
Well, I'm going to think about this and talk it over.
Okay. So what you're telling me is that you think that this is a good idea, and I mean you agree with me that
Right.
these amounts are real, okay? And money is not really a problem. You just think it's time to think it over. Is that what you're telling me? I mean, just because you don't like you like to make a decision, you want to think about it first.
Right. Well,
Okay.
we have coverage right now, so we just want to discuss it and make sure that we're doing the right thing. So we need some time to do
Good.
that.
I'm glad to hear you say that because a lot of people they'll just sign and go right on. I think it's really important that you take time to think about things. Let me ask you this: would 4 to 6 weeks be a reasonable amount of time for you?
Sure, that's plenty.
All right, well, let me tell you how this works. When we complete the application, okay, and we put a check with that application, we provide immediate coverage. It's in the form of a temporary coverage. Because life insurance is different than auto and homeowners insurance in that with that I can, you can be at the car dealer and I can bind the coverage immediately without even seeing the vehicle, okay? Here, we have to go through an underwriting process. They have to check out your health situation and take that risk, and it's something that goes beyond me. I have to send off to have that done. You may even have to take a physical, it depends, okay? So based on that, that's the information that we need to get done, okay? So because of that, it's important that we, by putting the money with it, eventually what happens is that you, sorry, I lost my train of thought.
It's okay.
When you put the money with it, what you do is there's about a 4 to 6 week period that this occurs, okay, and then in addition to that, if anything you should change your mind in the state of Texas, you have a 10-day free look period as well. So does that sound reasonable?
Yeah.
Yeah,
Okay.
that sounds
Yeah,
good.
I stuck with the same thing about it.
So if you go ahead and write me a check, we'd appreciate that. And also, I want to make sure, Andy, that if you'll help me out, we can get some names of some other people that you might know. Here's a list of some things that might jog your memory. If you help me with that, I'd appreciate that.